Thank you everyone for coming. Great turnout, considering it's still summer vacations. But everyone's interested in FinTech in Asia, correct? Put your hand up if you're interested. Okay. We've got some really well-known and experienced people who have had contact with FinTech companies and work in Asia. So I'm going to actually turn it over to them and allow them to introduce themselves. Just briefly, I know there's a few people from my meetups, but I run the Silicon Valley FinTech meetup and the Bay Area FinTech meetup, and we have some great panels and talks. You can find us on the meetup site, and we have them bi-monthly, one in San Francisco and one in Palo Alto. Fantastic speakers, fantastic panels, fantastic moderators. It's unusual for me to be moderating, and everyone has a great time, great networking. So please come along if you feel the need. Okay, so I'm going to pass it over to Ivy. Ivy is from Leia, and she's going to tell you a little bit about her experience.
Excellent. So my name is Ivy Montgomery. Nice to meet you all. I head marketing and design for Layer. Layer is a messaging platform that we enable FinTech company, instead of building their messaging capability from scratch, we have a platform that enables you to build your branded experience seamless to your brand itself. So if you are Bitcoin company, it would look just like the messaging capability would look like just your brand. I was brought into this conversation because I was recently in Hong Kong for the RISE conference. So I want to give you guys some perspective in terms of marketing in the Asia market, as well as adding technology to, communication technology to your solution.
This is Lawrence Tang, Invest Hong Kong. I'm based in San Francisco. Invest Hong Kong is a government department. So we have the whole team here, actually, Michael somewhere, Kerry and Robin. So we are all based in San Francisco. So basically, we help and talk to any companies wanting to come to Hong Kong, China, Asia to expand their business. So FinTech is developing very fast in Hong Kong, lots of opportunities. So we have a lot to share.
So my name is Ken Kwok from Stern Ventures. Stern Ventures is an investment bank that connects executives to strategic capital, $5 million raises and above, all the way to hundreds of millions of dollars in M&A transaction. I've been in the investment banking and investment management for over 10 years, done over $250 million worth of transactions in a internet, clean tech, and FinTech space.
Hello, I'm Professor Amy Shuen. I'm here because I'm a bit of an unusual professor since I've been a corporate venture capitalist as well. I'd also like to say that I'm here because the University of Hong Kong recently asked me to start a FinTech entrepreneurship program that we co-created with 6 Hong Kong startup CEOs. And so I had an inside look at how things are moving incredibly fast in Hong Kong and in China, and hope to share some of those interesting insights and stories with you today.
Thanks so much. So I was wondering if you guys could tell me what sort of resources are available for FinTech companies planning to expand to Asia, because I don't know, and I'd really love to know. Anyone?
All right, I'll talk about it from marketing standpoint, and maybe you can talk about it from investment, etc. So there are quite a few events in Hong Kong, such as the Finovate Asia coming up in November, I believe. There's the FinTech Week. There we go. That's it's not related to me, but I'm promoting because that is a really good event for people who want to get to know other FinTech companies. In terms of other events, there are all kinds of meetup. When I was there at RISE, I participated in at least 2 meetup. I spoke at one of them. And so there's just constantly different meetups and events to connect with people in forums.
Yeah, in fact, the Hong Kong FinTech Week is the driving force behind is Hong Kong government. Is us. But we are very pleased that actually the private sector come up very strongly to put up lots of things. So open days, demo days, pitching, competition within a very packed 10 days of event. And then FinTech Asia will be in Hong Kong the week following. So in terms of support for fintech companies, so we have lots of things ranging from the matching grants, ranging from the sandbox by the central bank, the Hong Kong MA, research institutes. So lots of things are happening that companies can talk to us if they want to look at the market and what they can do in Hong Kong.
So there's a lot of talk about Hong Kong, but Hong Kong does not necessarily represent all of Asia. There's also other incubators in Singapore, in Beijing, in Shanghai. Also, there are corporate venture capitalists that support an ecosystem, such as, say, PayPal or MasterCard or Citi. You just have to go out and find those resources as well.
So one of the big advantages of being a professor is that I can actually ask and hear from the CEOs in Hong Kong, and I ask the question of what sort of resources or why were they there and why did they decide to start up their companies there. The interesting answer that I received from almost all of them was proximity to China and being in the mix of the amazing transformational changes that are happening right now because of WeChat and Alipay. So many of you probably have read that there are now transactions in Alipay and WeChat that are nearly double what PayPal and Facebook has. There are billions of dollars passing through that system, and even companies in Silicon Valley, like Stripe, are partnering with those companies to be able to access all of the Chinese consumers who in the past have been captive with their RMB and be able to have services and products all over worldwide be purchased by these consumers.
So I know Citi did a fantastic report on 2016 that actually China, I think, had 46% of the investment capital in fintech, which is massive compared to the rest of the world. So I'm just wondering, what are the opportunities like for investment in China and obviously Asia in general, if you know about other parts of Asia? Anyone?
I can take that. For example, just to share some scope of the Asia-China market in fintech. For example, a McKinsey report shows that nearly half of the SMEs, small enterprises, they are unserved or underserved in their financing need. So there is a credit gap of about $2 trillion. So that means those are greenfields, new areas whereby fintech companies can give it a try. But on the other hand, there is another extreme of the Asia market. So another report shows that the high net worth people, the number of high net worth people in Asia, 2 years ago, it surpassed the North America in total already. So that means wealth management is another big area whereby the Asia is at least as big as in the US.
I just wanted to mention one thing about wealth management because we worked with Privé Managers, which is an award-winning Hong Kong startup. And one of the things that we discovered that was one of the important key success factors of Wealthfront was that many millennials believed that they could trust software or a robo-advisor more than a human advisor. Mm-hmm. And it turns out in most studies done in China that Asian investors feel the same way, that often Asian investors and Chinese investors would trust software and a robo-advisor, and especially the new millennial and new middle class, who might have many reasons to mistrust a human advisor.
I can add some color to that.
Right.
I was bringing a FinTech company to Hong Kongese investors and their robo-advisory. And basically, they loved the technology. It was a way for the investors to achieve better diversification via or leveraging AI, right? But they wanted the portfolio to be able to trade on a daily basis, and this is not a technology that serves that very well. But on the other hand, for a lot of Chinese investors in the stock market, that's what they do, right? And that's what they're familiar with. And so if you're adapting your product to the Chinese market, that's the first thing you want to be able to understand. What is the investor behavior, or what is the lender or lendee's behavior? To talk about like the you mentioned that China represented almost 50% of the investment. That is very true. I would have to also caveat that in 2016, that number was a little skewed because there was about $10 billion that went into FinTech globally, of which 50% went to China, but of which $4.5 billion went into Ant Financial. Right, so that is one single investment by Alibaba.
Wow. Any tips about gaining investment or accessing investment in Asia?
I wanted to point out that global corporate venture capital is something that most people in Silicon Valley sort of think as being a second best option because we have so many strong independent venture capitalists here. But for the rest of the world, and particularly in Asia, corporate venture and innovation centers play a really important role in bridging the gap between technology, great ideas, entrepreneurs, and getting to the marketplace. So it's really true in Hong Kong that Hong Kong is an extremely international and multinational place where lots of financial institutions have set up shop, as well as set up shop for incubators, innovation funds, and accelerators. And so the government, Invest Hong Kong, Cyberport, a number of banks and financial institutions are very, very willing to help support through both money and space and connections, along with sandboxes, to any interesting technology and startups that are interested in making the foray into the Hong Kong and China market. As well as, I want to point out that it's not only the Chinese market, because Hong Kong now, with the Belt Road Initiative, has a number of infrastructure funds for doing business all over Southeast Asia. So it can be a gateway not only to China, but also to Southeast Asia.
Yeah, let me add a little bit. In Hong Kong, it's not only the government funding. While it is a very good fund, let's say it is a matching grant, it is non-dilutive. So after the R&D project is done, the company keep 100% of the shares and IP. But in addition to that, international VCs, they are all in Hong Kong. For example, Sequoia. So they make a very successful investment into WeLab, which turned it into the world's second largest Series B FinTech fundraising last year. So check on it. It is WeLab. They are so big and so attractive because they get a special way to tackle the China market.
I would add just one little way of looking at it. You guys are looking at it from a finance and access of money perspective. I look at it also from a technology standpoint. When I was over there just a month ago talking to a different fintech company where they decided to set up their shop, part of it is access to software engineers, and also part of it is actually the infrastructure itself. If you're building technology, you got to be in a place where you're going to have your electricity, your telecom, it's going to be working. And so Hong Kong happens to be a very optimal place. I think Singapore is also another really good place. And in terms of access of software engineers, Hong Kong, it was easy for them to find not only engineers from China, from Southeast Asia, but also really good support people for global support. So one of the things that we were looking at is we have a client, really big client in Japan, and they need Japanese support. And when we were choosing between potentially setting a shop in Japan versus setting a shop in China or Singapore, where we could find different people speaking different languages, we found that it was easier to set up a place in a location where we can find multiple language speaking versus going to one specific location, solve one problem, and then go to another location and solve another problem from a language perspective.
Really interesting, thanks. I know we had a panel quite a few months ago called FinTech in China, and some of the panelists were telling us that as soon as they go to China, they just never touch cash the whole time they're there, and how when they get back to the US, it's a real drag. So I guess my question is, what do you think are the strongest focus in Asia as far as FinTech companies? What sort of companies are the strongest?
So statistically, payment has the highest rate of adoption. It's above 40% right now, and that's why when you go to China, it's okay to operate purely within your phone as your wallet, right? And then the other is InsurTech, which has about a 35% adoption rate, and that is well in excess of any other country on this planet.
Thanks.
I also wanted to mention, it's partly too that in those two areas, there was an amazing vacuum in China. If you think of it, part of the issue for InsurTech is that there's very little insurance and safety nets in China. So you have millions of middle class now and fairly wealthy individuals who are trying to figure out what to do about auto insurance, to figure out what to do about getting loans. So all of those things have played together to accelerate what is now a sort of mobile sort of generation where the information on your phone and your social networking can be used effectively for your credit ratings, so that you don't have to have a credit card. You only need to be able to provide information from your phone for a data analytics and algorithm to figure out if you're a good credit risk for a loan. So that whole shift in InsurTech, as well as credit and peer-to-peer lending, is taking place because China had leapfrogged into the smartphone world.
Yeah, Amy, I want to comment on that point. When I was in Asia, every FinTech company, their first strategy from a technology standpoint is around the phone. They completely bypass the concept of building something on the website or the need for a physical store. Everything has to do with phone. And that's their number one development strategy, and then everything else just falls as a secondary phase two.
Yeah, for sure, because InsurTech in China, there is a big company called ZhongAn, which is the online-only insurance company that make them very easily get into the top 20 of the unicorn in the world. So another actually quite promising area is blockchain. Actually, so there is a hot area, so-called initial coin offering. So in July, it was an exciting month because in Hong Kong, we have a very interesting story. So in the first week in July, one of the Hong Kong company called Block.one, they have an ICO. And in 5 days, they raised 160 million. And then they make them the world's largest ICO in the world for just 1 week. Because back in San Francisco, the next week, you know it all. So Tesla make their 232 million in a week, and then they make the other world record. So blockchain is definitely a booming area because of its capability, smart contract, and lots of things that can happen that can be done by blockchain.
Could I just mention, the other thing that's so impressive about the ICOs is, as you know, one of the issues with IPOs is that often there's maybe a few founders that become very wealthy and maybe they go back and become investors. What seems to be happening with many of the ICOs is that the money that's put into that is plowed back into making better development and better companies that are based on that particular cryptocurrency. So there's this virtuous cycle that's going on with ICOs where the blockchain is becoming more and more used in many, many different areas. All of you should probably take a look at the video that Pimo put together on blockchain in the music industry, for example.
Can I just ask an audience question? How many of your companies are doing blockchain right now? 1, 2, 3, 4, 5. All right, that probably represents about 5% of the audience. When you get a chance and you do your ICO, sell until, because the big idea behind cryptocurrency, and I'm not saying blockchain as a technology is wonderful, right? It's a trustless system of having no single entity keeping all of the data record, right? Everything is spread out. That's beautiful. But with respect to Bitcoin and cryptocurrency, it acts less as a currency and more as precious metals. It's more like gold, right? But the difference between real gold and Bitcoin is that there is no such thing as creating blue gold, pink gold, purple gold, rainbow gold, right? But there is such thing as creating new Bitcoins, right? And ultimately, the idea of cryptocurrency will continue to live on because it is important for capital movement between boundaries, and that's unchecked, right? But there will be very few winners, right? And when the getting is good, like 1999, get out when you can.
So just to ask another question of you, Kang, what's the uptake like then in Asia as far as cryptocurrencies? Could you talk a little bit about that?
One of the reasons why cryptocurrency is valued at or Bitcoin is valued at above 2,000 was really because of the Chinese crackdown on capital outflows, right? Now, imagine if you originally could bring millions of dollars cross-border with some regulations, but now it's very difficult for you to bring it outside. Now with cryptocurrency, you just need to remember a password, and however many Bitcoins you had before you left China, you still have when you arrive, unless you forgot your password, in which case you're kind of screwed.
I just wanted to quickly add, Kang also mentioned that one of the areas of most interest was payments. And the story that I can tell there is that currency exchange and payments, which is the area that Valut, one of the companies that was our co-founding group, used, was the fact of being in China. They realized how quickly WeChat was coming online and looking for retailers all over the world and making partnerships with lots of companies in Silicon Valley. And so they were able to, in the year's time that they knew about that, to pivot quickly and have their real-time currency exchange model actually work with WeChat. That was huge because that propelled their growth in 1 year's time in a way that if they had just worked in traditional currency exchange, they could not have achieved.
Yeah. Further on blockchain, but a little bit away from cryptocurrency. So actually in Hong Kong, we are doing something interesting and new. So Deloitte, in partnership with 5 biggest banks in Hong Kong, or maybe in the world also, so we are building a trade financing blockchain platform, whereby, trade financing is very labor-intensive, document-intensive, letter of credit, title transfer, transshipment. So lots of things are really, really labor-intensive and take lots of time to validate. So we are trying new ways of making it more efficient through the blockchain platform and technology. So something must be exciting over there.
So I'm going to comment a little bit about the payment aspect. So obviously, everyone knows WeChat has 99% coverage in China, and you can do everything payment included within WeChat itself. So about last week or maybe a few days ago, TechCrunch had a report, so the Wall Street Journal, cover an Indian payment company called Paytm, and they're trying to conquer to be the WeChat, and using basically payment within messaging system. It's actually powered by Layer. So I thought it was very interesting to bring that up. It's a fintech company using technology to actually grow, which is a whole different method from in the past where you're using the traditional method of, how do you solve a particular invoicing problem? How do you solve a blockchain problem, et cetera? This is actually using payment through messaging to now grow to be the dominant player.
Fantastic. It's very exciting what's happening in Asia and China. The thing that concerns me most and has always concerned me for many years is the copycat syndrome, the cloning that happens in China, not so much the rest of Asia. Is there any comments that any of the panel would like to make about that and how to safeguard if you're taking your company there or if you're developing a company here and you don't want it cloned over in China?
I guess that one of the things that Silicon Valley has learned and that Chinese startups are learning as well is move fast. And if anything, it seems like there's a bit of a business model separation that often the technology plays and first movers are coming out of Singapore and being tried out. And then China is deciding, or Hong Kong is deciding which of those business models seem to make sense and providing either their own technology or take that makes sense for the large populations in China.
Any other comments?
Oh yes, of course. You can expect a question from a government person's viewpoint. It always comes up. So let's look at the issue from 2 different angles. One is the regulatory, the legal angle, especially in China. And then the other side is the practical strategy for companies that they can take. So actually, from the legal angle, China joined all the conventions, Paris Convention on IP protection, and then the Patent Cooperation Treaty, and then the Berne Convention on Copyright. They all joined them. But then, on the other hand, they have laws, but on national level. But the problem is that enforcement is on the provincial and the municipal level. And then there are so many vested interests and lots of things away from Beijing. So that's why it's always been difficult. But then China is moving in a very interesting direction because they need more innovation and technology. But then look, if they do not have IP protection, just like a chair, there is one leg is missing, they can't go that far and go that fast. So they need to boost up their IP protection. By what means? So actually, they have an action plan whereby by 2020, they have 12 milestones to meet, targets to meet in IP creation and usage, in IP management, protection, and collaboration with international. And I was told that they are going to set up 3 IP-dedicated courts in Beijing, Shanghai, and in Guangzhou. Maybe friends of IP lawyers here can help or advise if actually they have set up the free course already or not. But anyhow, so go to the company strategy that they can take. So this is not from me, I learned from everybody. So different ways. So some companies will keep their crown jewel outside China. Will it be the software? Will it be the final piece of the chip that will be assembled outside China? So that's one way. The other way is that for R&D companies, they can compartmentize. They can make it modular for R&D development within China and back in their headquarters here, whereby if they got one, they can't make anything out of it. So other strategies is a must actually. On day one that you reach out to try to do China business. So make your own IP protection internally. So protect your own self by your own internal processes. Just like in China, they are more lenient in some aspects, like digital devices are not allowed in the plant, in the factory. So the USB ports are blocked. So there are different measures that you can take. And some companies even take it to the extent that they may not want to do patents because they will disclose what they are doing and how they do it. So they may keep it as a trade secret. So it's not so much as a secret, but it's a way that you need not disclose everything, but you keep your own secrecy, the secret sauce.
That's really great advice.
Right.
Thank you, Lawrence. I'd like to actually open up the floor now. Hang on, we have to give Q&A. I'd like everyone now, if you want to ask questions, we've got 15 minutes to do that. So please, if you want to put your hand up, I'm going to come around with the microphone and...
Hi. In addition to the copycat question, there's another issue with American companies in China, especially with social media companies where the government shuts them down. For example, there's no Twitter, Facebook, YouTube, anything like that available in mainland China. So I'm doing a blockchain startup here in America. I'd love to launch it in China, but I know if I just go and do a Chinese version of it there, it'll get shut down, I'm pretty sure. So are there any alternative venues you can enter the mainland Chinese market, like through a joint venture maybe with a Chinese company, or is there any way to protect yourself from being shut down by the government if you're doing something in the online world?
I think that that you have two very, very different segments that you have to look at in terms of intellectual property and of being shut down. I think that the software world works quite differently, of course, and the digital world works quite differently than the physical world. So I spent years in semiconductors and in the world of looking to protect intellectual property by patents. But now in the software world, data and algorithms are part of your protection, so that what many companies are doing and what I've seen our co-founding software companies doing is that they will partner with, let's say, a large financial institution or a large distribution retail and get a huge amount of data, which then they can work their algorithms, artificial intelligence, and data analytics on to come up with algorithms that make complete sense for a population of that they're going to segment and target that market with. That's one way to protect those crown jewels, is to actually make them so targeted and so much based on proprietary data about individuals and either their behaviors in wealth management or in the algorithms of stock market trading, that those things can be protected and actually distributed quite widely through the web and online.
Okay. So if you think about how you can partner with locals or local entities that know how to navigate the rules and regulations and play by the game, right? Then that's a better opportunity. It might even be just a law firm, right? That would help you stay within the bounds of Chinese regulations, right? I did a visit onto the Google campus of Beijing when the very next day they shut down. And that was one of the reasons is because Google had certain principles that they wanted to stick by and wanted to, or thought that they were above the Chinese law. And therefore, when the Chinese law did not allow for certain things to happen, they shut themselves down. Right now, it wasn't because they purposely shut Google down. It's because they didn't follow the rules and regulations. If you think about the most recent activity of Apple taking away all the VPNs in the Chinese store, right? Apple could easily try to fight that, but guess what? The Chinese have a lot more power with respect to their own consumer base, right?
Yeah, for sure, compliance is one important thing. But the other thing is that the company can actually try Hong Kong. Hong Kong is a very Chinese dominant population, but we are very international. So free flow of information is at the heart of Hong Kong. So try to see if it works in Hong Kong.
Any other questions?
Oh, can I just mention that I want to say that that's one thing that all of the companies that we worked with said that Hong Kong was a great place to be an expat, to start a company, not only because of the support and the proximity to China, but also because of the small sort of and small degree of separation between a startup and decision makers, and even at the clients and at the partners. That it's a very compact place. You get to know everyone in the community and get to know everybody in the investment as well as partnering community very quickly, and so things can get done fairly quickly as well.
Hi there. So you guys are talking about products like WeChat or Alipay in China. I haven't personally used WeChat or Alipay myself, but my understanding is that such product is not legal in Hong Kong yet because of financial regulations. Am I correct? So I guess my question is that if you have, I guess I would say the regulations in China are probably more lax. So if I want to have something spread in China, why should I set up shop in Hong Kong where I cannot even implement my own product in my own homeland? Why should I do it in Hong Kong instead of setting up shops in China?
So the thing might be, look at it this way. So China is a very complex, very sophisticated market. So part of it is very basic, part of it is very advanced. Look at it as the Mount Everest of the world. Any company trying to challenge Mount Everest at one go straight to the top. Even experts can't do it. So all experts need a base camp. So Hong Kong can be looked at it as a base camp for any companies wanting to do China. So they need local knowledge. The guide is right there, decades of knowledge. All the essential supplies are there. You can watch out for the wind and then the season and best route, map out the best route to climb to the top. So if you need a base camp for China business, so that is Hong Kong, whereby in a year or two, you will be much more well prepared, knowing more about China, the rules and regulations, and then finding the best way of doing China business and going into what niche market or sectors that you can do.
I'll look at it actually from a different perspective, from a technology development perspective, because the rules and regulations are so different in China. When we went over there, we made a conscious decision that China, though it's a huge market, it's really not right for us because we would have to redo our technology very differently to adhere to that particular country. So we step away from it and look at all the other countries. So also think from, because I assume you're a startup, right? So think from what type of rule and regulations that your FinTech company is trying to play, then maybe the rest of the Asia country, it's more fit for you than go to China, which is kind of a unicorn of its own.
Okay, looking at the vantage point of your base camp or Mount Everest, what other countries besides China and India are prime for intervention from FinTech standpoint, I assume. I know that China and India, they're quite far ahead, but what other countries, markets do you see prime for intervention?
So actually, I want to add to Amy's earlier comment is you look for a large consumer base, and then you look for underserved populations, right? India actually has a huge underbanked population. Only 35% of India's population goes to the bank, right? And I would imagine Bangladesh being one of them. I would also imagine Indonesia, right? If you draw a circle around Southeast Asia, most of those countries have 80 million people and above, and probably less than a third of them are banked or insured or what have you. Granted, there might be issues around their ability to pay. And then that's when FinTech comes in, right? Because for you to duplicate an account in FinTech is very cheap versus having another branch open or what have you.
I would also look at it from mobile growth perspective. So if you see a consumer base where there's a huge growth on the purchases of mobile phone, and then another aspect I would also look at is the infrastructure. How well is the infrastructure to support any transaction on your mobile phone? To me, that's another aspect to look at.
Well, I'd like to thank the panel. It's been incredibly interesting and from all the different perspectives. And everyone want to give them a hand? So Michelle's going to come up and talk about FinTech Week in Hong Kong. Okay. So thank you, panel.
Okay, thank you. Thank you, Pino.
Shake your hand.
All right. Thank you, Pimo. You thought it's over, but there's a little surprise at the end. As it was mentioned before, Hong Kong is a pretty international destination, so I'm the Polish guy working for the government of Hong Kong, pitching you the Hong Kong FinTech Week, the upcoming event, and I would like to extend our invitation to that event. As you could see, there was a lot of questions. Apparently, there's a lot of advantages, but also challenges connected with investing in Asia, in China. So we, in our day-to-day job, based in San Francisco, we work with companies, helping them out understand and navigate themselves in Asia, in China, in Hong Kong. And we will help you anytime you come to us, but if you want us to help you with acceleration, if you want us to accelerate the level of help, there isn't really a better place than the upcoming event, Hong Kong FinTech Week. Now, Hong Kong FinTech Week starts on October 23rd and lasts till October 27th. And it's obviously hosted in Hong Kong. And really, anyone and everyone who is in FinTech in Hong Kong, and actually in China as well, is going to be there. If you recognize some of the logos there, there are companies that are, pick any three of them, and just the three of them are going to be valued over $20 billion. So if you either want to tap into that money, or if you want to disrupt them, or if in any other way you want to have your time, face-to-face time with them, come to me after the event and I'll tell you how to do it. Now, the way we thought about this event, this is not going to be the event where you just go and listen to panels and then you have regulators or all the hotshots from big companies disappear. We will be helping you with organizing office hours. We will be helping you with organizing all the kind of networking opportunities you may want to have as a potential investor to Hong Kong. I mentioned that all the big companies are going to be there. All the other stakeholders and parts of the ecosystem are going to be there too. Companies such as Cyberport, which is our campus and co-working space and incubation program. There's going to be some venture capitalists as well. So if you want to tap into some of this Chinese money, this is the place to at least give it a first try and get the lay of the land in Hong Kong. Now,
Last year we had over 2,000 people. This time also we're not just going big, we're going Asia big, which means we're going to have over 4,000 participants, over 200 companies, and over 100 speakers. And if I'm speeding up a little bit, it's because I don't want to keep you away from the mingling session and keep your energy going so we can talk about this event later on one-on-ones. Now, the way the event is structured, we work with two different partners. And so if you go and you're interested in blockchain, China FinTech, cybersecurity, insurtech, or wealth tech, you should aim for going for Monday and Tuesday. Then you can plan, for example, Wednesday as a day where you just go on the offsite meetings, where you go and visit Cyberport or Shenzhen. So we're going to get you covered offsite as well. If you're interested in AI or China FinTech or accelerators, Thursday and Friday are good events for you. Now, if that sounds attractive to you, you can of course assume that there's going to be a big price tag. So let's talk about costs. But actually, costs are not that big. We actually really want you there in Hong Kong. So we made sure that the participation cost is not prohibitive. So if you know about all those great events in Silicon Valley, this one is going to be as great, but way much cheaper. The cost starts at $100 for startups with the early bird. Early bird is till the end of August, so if you want to get that deal, hurry up. I kind of feel like I'm selling something on QVC, but either way, it is much better than your typical product you would get from the TV show. Now, I hope the price was a good surprise. Another good surprise is that if you happen to be operating in the US, if you either happen to have an idea and not a company or a big company, whichever size, if you come and talk to us, you are going to be part of the US delegation. Now, another hopefully nice surprise is that I'm going to be the head of that delegation, and I'm going to be going with you. So in the lead up to the event, we will be working on meetings, making sure that you get the biggest return on investment you can have while investing your money and time into going. And not only I will be helping you out in the lead up, at the venue, you can look for my unshaven face, and I will take you places, and I will show you how you can talk to the stakeholders in the FinTech ecosystem. On top of that, we are also offering a limited number of booths and demo tables for companies that are part of the delegation. And on top of that, and that's the final part of surprises, we will be helping out with trips, as mentioned before, to Shenzhen, also to Cyberport. And I've learned today that during the same time, there's going to be also the wine and restaurant festival in Hong Kong. Participation cost is $10, so it's hard to say no. So yes, that's pretty much it in terms of the Hong Kong FinTech Week. Again, we are there for you, and we will be in the lead up to that event for sure. So if you're interested in any way, if you want to explore it more, please come up to me. And this is it from me. I'm not pitching you anymore, but I would like to extend a massive thanks, of course, to Pimo and to our great panelists, and also to our partners at Plug and Play. And I would like to call Victoria to the stage so she can give you a nice send-off. Thank you. Thanks.
Hi, I'm Victoria. I'm part of the FinTech team at Plug and Play. So this is the end of the event. If you have any questions or are interested in getting involved with Plug and Play in any ways, either as a startup, corporate, or looking for a job, please come to me and I'll have more information. Thank you. And feel free to grab drinks and pizza on the back.